Guys, in this video, I'm going to be doing a technical analysis of Amazon stock, ticker AMZN. I'll also be doing later in the video a discounted cash flow model to kind of determine, what the fair value price target of Amazon stock might look like, or what that might be. So we can see here at the beginning of the chart, this is a daily chart, so this is from about middle part of 2018 through the present time, which the price of Amazon stock closed at $17.52 on Monday, November 18th, which is the day of this recording. So if we look here, you can see towards the latter part of 2018, the stock, went from about 1,700 up to 2,000. It dived over the latter part of 2018, the last few months, from about 2,000 down to about 1,400. And then we saw in the beginning part of 2019 another run up, little pullback, and then again it almost it went over that 2,000 mark, and then we had a pullback down to about a little below 1,800, and then it's kind of over the last 3-4 months it's been kind of sideways, choppy price action. So recently the 50-day moving average on the daily chart of Amazon stock fell below the 200-day. And we can see here that since the Amazon stock price broke above the 200-day moving average, which is in the middle part of March 2019, it's held roughly. Until the late September, it held that 200-day moving average as a support level. So you can see there that oftentimes is a good kind of buy signal for investors, or if they're looking at key support levels for investors, traders. So it held that 200-day moving average there for a while, and then it recently, in the late part of September, it broke that, and then that's now has been a resistance point since over the last month and a half. So because that broke the 200-day, that seems to be a resistance level. Now we're looking for a new support level in the near-term price of Amazon stock. So we can see here you can see the lines, the green lines there are key support levels, and based on the Fibonacci retracement. I'm not going to do a deep dive into the Fibonacci retracement, but if you go and look up what that is, it's basically a good level where a lot of traders and these algorithmic traders will set these buy and sell orders based on these prices. So you can see that again, since kind of beginning part of 2019, since the stock broke through the 200-day moving average, that 50% retracement level is about 1695 has held, and then that's when it kind of hit that after the sell-off from May till when the stock, the RSI, hit about 30 in the beginning part of June. That 50%, that might be a support level there, which would imply about a 50-point drop in the stock. If it breaks through that, there might be further declines ahead. If you look at the about 62% retracement level, be looking at roughly 1614. If it went all the way down to the 76%, be looking somewhere 1500 level. So look to see if it holds that roughly $1,700 price level over the next month or two. If it does, that might be a place to enter a buy order. If it falls below that, if it breaks that, then there may be further downside ahead. Maybe it's the 1600 level, maybe it's roughly the 1500 level, but that's always a good area to gauge where to enter those buy orders based on those support levels, and it's what a lot of other traders use. So that's kind of why prices move the way that they do, especially in today's world of the algorithmic traders. A lot of trading is done by computer programs, and they follow a lot of the same patterns and charts. So watch that 50% level, which is about 1700. I wouldn't be a buyer at the current level. I want to see a little bit more price action to kind of see if it can, in the short term, if it can hold that 50% retracement level. And again, the retracement levels, it looks at the high and the low point of a high price and low price of a stock based on the timeline of that chart. So watch that, and I'm going to flip over here to the discounted cash flow model to see kind of based on the fundamentals and the earnings power and the cash flows to see if Amazon, see kind of what the projected price would look like based on a 10-year discounted cash flow model. So we can see here that this is a 10-year discounted cash flow model for Amazon stock. Amazon over the last 12 months they generated about $20 billion in free cash flow. I'm going to project for this model that Amazon's going to grow its free cash flows by about 10%. And project a long-term growth rate of about 3%, which is a pretty conservative metric. It's about the long-run inflation rate, anywhere from 2.5% to 3%. Has been the kind of long-term average inflation rate. And then the discount rate is 9% because for a discounted cash flow model, obviously a dollar today will be worth less in the future, just because you could invest that dollar into, say, a stock index. So that's what you discount the cash flows, the free cash flows by. So we're going to discount those by 9%, and then assuming a corporate bond yield of 4% for this model. Right now it's in that 3.5% to 4% range. So, all told here, if you look, if we project the free cash flows forward about 10 years, and then discount those cash flows, again, discounted cash flows, what it says is that you take the sum of the discounted cash flows and then you add it to the discounted value, or the present value of a projected market capitalization. So for this example, I use the present value of, say, Amazon stock or Amazon's market cap, say 10 years from now, is, in this model I said, about $517 billion. And then the sum of the discounted cash flow is about $230 billion. So we get an implied equity value of about roughly $750 billion. And Amazon has, about 496 million shares outstanding. So if we assume that Amazon can grow their free cash flows by 10%, we use a 9% discount rate, assuming a 4% corporate bond yield. You can also use the average dividend yield of a stock index like the Dow Jones, something like that. We get an implied Amazon share price of about $1,500. So, based on the current stock price of $17.52, that would imply if you assume that Amazon can grow those cash flows by 10%, and you discount the free cash flows by 9%, then there might be it would apply about a 14% downside in the stock. So let's go back. I'm going to flip back over here to the technical analysis chart. So in that model, we assumed, what, 1506. So that would imply, you can see the 76% retracement level is about that projected or implied equity value based on the discounted cash flow model. It'd be about 1508. So, look to see if it holds that 50% retracement level, which is again about 1695. If it falls below that, maybe somewhere in that range of 1500 to 1600. And I think that you might be able to, you could build a case that the earnings power, cash flows, can support that that price value, right? The price target. Because again, kind of to wrap it up here, tie it all up, if we look at it from a fundamental standpoint, Amazon, we projected 10% for that. I think that's a pretty conservative metric, because if we project that Amazon can grow those free cash flows by 10%, Amazon's grown its sales by about 25% over the last 5 years. It's grown its free cash flows by greater than that number. And then if you look back from, I read something where if you'd invested back in the IPO back in 1997, you would have, the annual average returns in Amazon stock would have been about 38%. And then if we look at it kind of, breaking down their business, obviously their workhorse, their star of the business, really, if you will, is the it's the AWS. And with the cloud computing, because a lot of the apps that we have today, a lot of the computer applications are built through the hosted web servers in the cloud, and Amazon AWS has a large market share of that. So they're competing with Microsoft and Azure. They're competing with Google and Google Cloud, but those are the three main players, and Amazon has the dominant share. I think it's something, I don't know exactly, but something in the range of like 40% right now. And then Azure is growing. That's Microsoft. So that's definitely a competitive threat to Amazon. But anyways, to tie it back into the free cash flow model, if we assume that kind of cloud computing, there's been a lot of industry analysts have said it could grow something in the range of 20-30% per year over the next 10-20 years. So you take that piece of the business, and then obviously we know Amazon for the retail side. When you shop on Amazon.com, or you get groceries delivered, or you order a book off the site, that's a little bit lower. That's a lower margin business, kind of lower growth business. They're getting into groceries, getting into pet products, and a lot of other things. They recently made an acquisition of Whole Foods and things like that. So all those consumer good products, if we assume that's probably in the single digit growth rate, they already have a huge market share, right, of kind of the consumer goods space, and something like 40 to 45% of all e-commerce sales. Amazon controls about 40 to, I think, 44% of all e-commerce sales. Read that recently. So, if we tie that all in, I think 10% gives us a really conservative number, a conservative, conservative growth metric for kind of projecting the future cash flows of Amazon stock. And so, obviously, we want to be conservative in those projections. Better to be conservative than too aggressive or optimistic, just because I think it gives us a more realistic idea of what a near-term price target would look like. So, again, I would just watch kind of. In closing, I would watch for that, maybe that 1700 level to kind of find a key support level for Amazon stock. And then, if you're trading and investing at home, using those stop losses, kind of having those defined stop loss and profit taking, buy and sell orders, is a good way to invest, and then always allocate your capital and according to your defined risk tolerance, and always diversifying and things like that. So thanks for watching the video. Hope it kind of sheds some light on where Amazon stock might be headed here in the future, and look forward to seeing you here on a future video.